Welcome back to another roundtable. My name is Adam. With me, I have Rusmin and Victor.
Hello.
Once again.
Hi everyone.
Thank you so much for joining us. Today we're going to talk about Singapore banks once again. So I think the last time we talked about Singapore banks, I think it was around late April, May, I think, this year. And we were talking about how interest rates were going to rise and how that would benefit
The banks.
All right. So we're going to do a review, an update of what's been happening with Singapore banks. A lot of them have been touching all-time highs, actually.
Yep.
So let's do a recap of its recent performance.
Fundamentals.
Yeah.
So I think the interest rate really benefits the three banks currently. If you look at their latest third quarter result, the year-on-year based on the third quarter 2022 versus the third quarter 2021, you can see that DBS actually up their profit up about 32%, and UOB actually up 34%, whereas OCBC up 31%. And all this increase, right, was due to their net interest income increased by a lot, right? And if you look at their net interest margin, all of them expected the net interest margin to actually rise above 2% in the fourth quarter and also further up in the mid of 2023. So if you look at DBS, right, their net interest margin actually raised to about 1.9%, UOB about 1.95%. In fact, the best performance in terms of net interest margin is actually OCBC, which rise to 2.06, which they expect to rise fourth quarter to 2.1%. So I think the interest rate really benefit them, but then of course right now it's only until the September, right? But in the recent months they actually increased the interest rate again.
All right. So what you're saying is that yes, so the performances have done really well.
Yep.
And then moving forward,
Yep.
you expect them to continue to do well.
Yes, correct. Yeah, because like I mentioned, if you look at the SORA, the 3-month compounded SORA, so the banks actually, the latest third quarter is actually closed at end of September. So if you look at end of September, the SORA was only like 1.9732.
Okay.
Right now at November, their SORA is about 2.7621. So all these are increased in terms of the floating interest rate that we can expect for the UOB. And in fact, recently they actually announced their fixed rate to be about 4.25% to 4.5% for the three banks, right?
Oh wow!
Within this range.
Okay, so that is pretty high. So we can expect. I mean, I think the fixed rates kind of give you an indication of where they expect rates to go. So that will give you kind of an idea. And of course, in the US, interest rates, like we've mentioned so many times, it's expected to go up in until early 2023 still.
Yes, correct.
All right. So how about the dividends? Have the dividends improved as well?
Yes, actually, all the three banks actually increased their dividends. I think with the, like I told you, the fourth quarter, right, the rates continue to increase based on the SORA they can see over in the chart that I just showed just now, right? So we can expect their earnings to continue to increase, pushing up the net interest income, which in return I think will increase their very high probability that they will increase the dividends for the second half.
All right. So I think we're looking forward to that.
Yeah. So basically there's a lagging effect, right? So every time they refinance those loans at a higher rate, it will only show up in the next few quarters.
Okay.
Right. So I think next year or 2023, we can expect that banks will start to report even better results.
Yes, correct. So like what Rosemary said, there's a lagging effect. So because the banks also have to lock on the depositor also.
Yes.
So the depositor will enjoy the interest first while they take time to refinance all those loans on their floating side, right? So that's why you can sometimes there's a slow effect, but you will slowly take time, a few months where you will just take into effect, right? So I think we are expecting like to get full impact in the mid of first half of 2023.
All right. So we expect interest rates to continue to go up. We expect the banks to continue doing well. So, but no, by that logic, you think stock prices should continue to go up?
Yes, correct.
Expected, right?
Yeah.
But do you think that all this is already priced in? I mean, because we kind of know this information. Everyone kind of knows interest rates are going up.
Correct.
And everyone expects it. So when people kind of expect it, they price it into the stock. But do you think that is the case for the three banks?
I don't think so. I think the banks, right? I think maybe it's the case for DBS, right? Because if you look at DBS, they are traded one standard deviation above their average, right? They already surpassed. I think they don't look cheap to me for DBS, but then they have like about 4.05% dividend yield. But whereas if you look at UOB, they are still traded below the one standard deviation above the average. Right, they actually touches it in the early of 2022, but then because of the recent drops, they went back down below their average and went back up again. but their yield is about 3.99%.
Mm-hmm.
So if you look at OCBC, they are still traded below their average price to book, their 10 years average price to book at very close to the 1 standard deviation, and the yield is about 4.51% for OCBC. When I talk about the dividend yield, it's all the trailing 12-month dividend yield.
Okay.
So based on this, right, if you look at the past 2008, 2009, 2018, right, when the banks are really pricing, right, they are usually 3 banks will be traded at above plus 1 standard deviation above their average. So right now they are not, and secondly, their yield are still high above 4%, right? During the high where a lot of people rushing in to buy the banks, right, the yield are very low. So these are the things that we want to watch out: the price to book and also the dividend yield for the banks. So right now, like we said, we expect the dividend to increase. So if the dividend will increase on the second half, right, we can expect the yield to increase if the banks maintain at the same price. But if the banks, the share start to push it up and they try to maintain the 4%, then you can expect the increase in the share price, right? So I still think that there's upside for the banks. It's not a time to sell the banks right now.
All right. So I mean, I think that's the thing that we need to remind everyone. I mean, ourselves as well.
Yep.
Whenever you see stocks reaching all-time highs, you go like, oh, it's time to sell. It's expensive or stuff like that. But again, you're going back to the valuation.
Correct.
Yes.
Yeah.
Because even though it's near all-time highs, based on valuations, which in this case is price to book and dividend yield,
Yep.
It's not really
It's not
near,
overstretched.
It's not overstretched.
Yeah. I mean, I feel that people are still not rushing in to buy the banks right now.
Okay.
So I think there's still rooms, right? It's when there's crazy valuation, that's where we decided that, maybe it's not the time to hold the banks.
All right.
But
So-
it's not now.
Okay,
Right.
so I think you kind of like answered my next question, which is basically what would you do with the bank stocks right now?
Yeah.
Okay, I mean, well, just disclaimer, we're all bank shareholders as well.
Yep.
As well, right?
Yep.
Yeah, all of us. So just to make that clear, but you kind of answered my question, which is basically what would you do with the bank stocks right now? So you wouldn't sell them at
I
this
wouldn't
point
sell them, yeah.
because you think there's still upside.
There's still upside, yes.
Okay, and
Yeah, I don't own all the 3 banks,
Yep.
but looking at the valuations for all the 3 banks, I looked at DBS. I think they are way too high.
you think
actually-
DBS is a bit high now?
Yes,
Okay.
yeah. And in fact, just 5 years ago, their valuation based on price to book is almost on par, right? About 1.3, 1.4. And then when the COVID crash came, they all dropped to below 1, right? Which is about 0.8, 0.9, the low.
Okay.
Right, very similar. So the gap, the spread is very thin.
Mhm.
But now, we're looking at the valuation, I think the spread between, in terms of valuation, OCBC, I think you're looking at about 1.1, and then DBS is about 1.6 above that
Yep.
at the time of this recording. So the spread is huge.
Mhm.
Right? I'm not sure why people are pricing DBS way higher than that, because if you look at the fundamental result based on what Victor has shared with us, I think on a quarter to quarter the performance a year to year growth is quite similar.
Okay.
Right? I mean, unless you're telling me that DBS is growing way faster than the other 2,
Mhm.
right, by a significant margin, then they deserve that spread in terms of premium for
Okay.
the valuation.
Mhm.
Right? So if let's say I own all the 3, I didn't, right?
Okay.
I would
Yeah.
have switched out DBS and then I
Yeah.
convert it to the other 2.
Okay.
Yeah,
Because-
I think
yeah,
DBS still have their advantage over the other 2 banks because DBS is sort of like a nation bank, right?
Yeah.
Yeah.
Most
Yeah.
people's deposits are with them, so they have the highest CASA ratio, right, as compared to the rest of the banks, right? So I think that's the advantage. And you talk about DBS, everybody knows DBS. Everyone's definitely have either DBS or POSB.
I mean, yeah, it's the biggest bank.
Yeah, correct.
right.
So I think still there's the way investor view DBS is still a premium compared to the OCBC and UOB, right? But of course, in fact, right now if you look at OCBC, they are still traded at a very attractive valuation with at 4.5% yield. You know,
Mhm.
Yeah, I kind of agree with Victor, but it's just that the spread now is way too big.
Yeah.
Okay, because again, 5 years ago, their spread is very thin.
Yep.
Despite the fact that DBS was still the best,
Yep.
bank that have the highest CASA ratio. It's same COVID when it hit, they all
Yeah.
hit back on the same valuation.
Yeah.
The spread
Okay.
is very thin. Now it's way too big,
Yeah.
so it doesn't make sense. I mean, as an investor, if I own no 3, I would
Yeah.
just keep the other 2.
correct. Yeah. So I think the
Yeah.
upside for DBS were generally much less compared to the OCBC or UOB. There's still more rooms for them to
Alright.
push. Right?
Okay, so no recommendation to buy or sell any of the
Mhm.
stocks that we're mentioning right now. Please do your own due diligence. This is just our opinion where we think the banks are in terms of their historical valuations.
Yeah.
It's up to you to have a look at that information yourself and decide. But in your opinion, you think, I guess, DBS is has fully realized more of its value in this
Yes.
sense.
Fully priced in.
I think Rusmin
yeah.
said correctly. Yeah.
All right. It could also be, I mean, that's for the case of DBS, but maybe in general, I mean, because you mentioned 4.5% yield, right? Maybe
That's
investors
OCBC.
are not OCBC.
Yeah.
I mean, more of them about 4% or above.
Yeah.
Right. But maybe investors not rushing in to buy banks or stocks because, I mean, Singapore savings bonds are
Correct.
3.4%.
Yes,
yeah. It's risk free.
Yeah.
Yeah, and then the banks are a little bit. Yeah, it's higher yield, but I take on the risk.
So dividends have to rise.
To match it,
Yes.
right?
All right.
I think the thing about DBS also partly is because their payout ratio is generally much higher as compared to OCBC and UOB.
Okay.
That's why their yield are able to maintain. If they maintain the same payout ratio as OCBC and UOB, right, their yield should be lower, right?
Okay. All right, got it. Okay, so I think that's a pretty good summary of what's happening with the banks. Anything else you'd like to add?
No.
Yeah.
Okay, I think that's all we have for today. And that's a pretty good wrap up, right, guys?
Yep.
Yeah.
Okay, so once again, I hope that was really useful, especially if you're an investor in the banks like we are, and what's happening with the banks so far. So I think they've been doing pretty well in the past few months.
Yep.
Yeah, and I think we expect it to continue.
Yep.
All right, so once again, my name's Adam. That is Rusmin.
Thank you.
That's
Thank you.
Victor. Thank you so much for joining us. Any questions about Singapore banks, put them in the comment section. Of course, if you like this video, please hit the like button and of course subscribe to our channel. Many more roundtables coming up. And we'd love to update you about what's happening with the banks again in the future. Alright, so thank you for watching and we'll see you around.